Hey everybody, Graeme McInnis here with McInnis Realty Group at Real Broker, and this is my video market update and forecast for 2023. In this video, we're going to be talking about what the Calgary Real Estate Board has predicted for the market looking forward into 2023, and where the economist who is employed at the Calgary Real Estate Board feels the market is going to be going in 2023. So I'm going to show you a bunch of slides that are from that presentation. Anne-Marie Laurie, she's an economist at the real estate board. She's actually a staff member of the Calgary Real Estate Board, and really interesting presentation. So if you guys are wondering what to do with your real estate needs in 2023, this should shed some light on that and hopefully give you some good information to help you make an informed decision for you and your family regarding your real estate needs moving forward in 2023. So let me share my screen and let's get started. All right. So this is, again, coming from a presentation from an economist who put this together, Anne-Marie Laurie at the Calgary Real Estate Board. Just happened earlier in January, and we're going to be looking forward as to what they think is going to be happening, the real estate board in Calgary and area in 2023. So first of all, let's recap 2022. What happened? Well, 2022, you guys exceeded expectations, super strong sales, and very robust market. And the peak of the market in 2022 was in about May. And then the prices for the more expensive detached homes did start to come down a little bit as the rates started to rise. As you all know, the rates have more than doubled in the last 12 months. What's happening with rates? Just a bit of a side note. The Bank of Canada is probably done raising rates. The inflation, which is why they're raising rates to help tame inflation, rising prices of real estate and all other goods, food, gas, and everything. It's working. So the Bank of Canada, just the other day, I saw in the news, they did an announcement that they probably won't be raising rates anymore this year. And inflation has come down significantly in the past 6 months as the rates have gone up. So it's working. That's what the job of the Bank of Canada is to help kind of control and stabilize the economy. And it's working. So just like they had to stimulate the economy when COVID first hit in order to get people to buy so the economy didn't go into a brutal recession, they dropped interest rates to record lows. And that did stimulate the economy, and a lot of people bought real estate, and the prices went up a lot over the last 2 years. And now you have to understand, if that works going when they drop the rates, they stimulate the economy. People bought cars. It was almost impossible to get a car in the last couple of years. It works in reverse too. So if they raise rates, they can cool the economy, cool inflation. So they did that and it's working. And so they're probably going to hold rates where they're at right now. And if you want to get a mortgage this year, you should probably go for a 3-year fixed. At the end of 3 years or so, that's when the rates will start to come back down. So then you can renew your mortgage and get a lower rate, hopefully. So just one thing to note here on the supply, months of supply, super low. There's almost nothing for sale, you guys. So that's what's going to be a big driver of prices going up this year. Huge demand, very little supply, prices go up. It's just a simple function of supply and demand. So let's talk about that. Supply challenges in most surrounding areas. So Airdrie, only 1.1 months of inventory. So this is looking at December. This presentation was made in early January. And this year over year was looking back into December. So December over December, December 2021 over December 2022, how do those two match up? We're looking year over year. And for Airdrie, in December of 2022, 1.1 months of supply. Super strong seller's market. The market in Airdrie went up 22% in 2022. So roughly, if you wanted to buy a $400,000 house, it's now $480,000 1 year later, and it'll probably go up quite a lot this year too, because there's still nothing for sale, but the demand is still there, and I'll show you what I mean by that in a minute. Chestermere, 2.4 months. Still, that's a seller's market, 2.4 months of inventory. And just to be clear, what that means is if we didn't list any other houses at the current rate of sales, it would take, in Chestermere's case, 2.4 months to sell everything. In Airdrie, 1.1 month to sell everything. Guys, this is an unprecedented time. This is insane what's happening in the market right now. Like when I say there's nothing for sale, I mean there's nothing for sale. And when something does come for sale, if it's a good house with the right price, it's gone just like that. So we saw that wasn't happening so much the last 6 months or so of 2022, especially in the higher priced product. Depends on the neighborhood, though. Some houses in Mahogany that are $700,000, $800,000 are, I sold selling super fast. So, anyways, 1.1 months of supply in Airdrie is just ridiculously low. Same thing with Okotoks, 1.1. Okotoks has been on fire the whole year. Airdrie on fire the whole last year. Even High River. Only 1.4 months of supply. So you get the picture here. The inventory is super low. The demand is still there. And the demand did taper a little bit the last 6 months as people kind of, it's what I like to call an adjustment period. Everybody kind of took a step back. They saw the rates rising. They put their plans on hold. There was still a lot of sales, but a lot of people also put their plans on hold to see what would happen. And what I've noticed in the past is that there is, when the market has a big change like that, like interest rates or whatever, something changes in the market, there's an adjustment period. Well, we've been through that adjustment period. We're coming out the other side of it. The Bank of Canada, like I said, is going to temper raising interest rates. So they're not going to be going up anymore. And people are kind of going, okay, I guess this is the new normal. So now let's move forward. Let's continue with our plan to buy or sell some real estate this year. And we're going to have a very robust year for sure. Let's talk about inflation, interest rates, and recession risk. So you can see the light green is where there's been recessions. And you can kind of see every time there's a recession, the market goes down. Then there's the recovery period where the market has a good recovery. Oftentimes the prices go up, and you can see this solid green line, the Bank of Canada target rate, and then the actual inflation rate. So basically what you're seeing here is that there was a little bit of a recession at the beginning of the COVID, and then the inflation really started to rise because the government, as you can see here, tanked the interest rates. That made it super cheap to borrow money for houses, cars, whatever. So people bought. They had nothing else to do anyway because everybody was locked down. And people wanted more space. They wanted to get out of their apartment and into a house in a suburb that had a big yard and, space from people, right? And really drove the market to an incredible degree over 2021 and 2022. So the good news, this is kind of the proof in the pudding. You can see the inflation peaked at about 8.5%, and then it's come down since about the middle of 2022. And then if I just flip over to this graphic, I want to show you this one from another presentation. The Bank of Canada is not expected to lower the overnight target rates until 2024. So, like I said, they won't even really consider starting to lower the interest rates until 2024. So, if you have a buying decision that's kind of on the table and you want to wait for lower rates, you could, but you might end up shooting yourself in the foot because the prices will go up so much more over the next year than that little bit extra that you'll pay in a higher rate today than you might get in 1, 2, or 3 years whenever the rates might go down. And just so you guys know, if you're under 35, you probably don't know this, but these rates are not high. Historically, the rates have been much higher in the past. I think the average interest rate for a mortgage, or just the average interest rate in Canada over the last 40 years has been 8%, and we're not there yet, and we're not going to get there. So kind of got to put things in perspective a little bit. But this is a good graph because what it shows, if I zoom in a little bit here, hopefully you can see this. Let me zoom out one. So basically, you can see the inflation is the solid blue line. The Bank of Canada target rate is the green line. And this is the gray area here is the prediction for 2023. So basically, inflation peaked in mid-2022 because the rates had gone up. They continued to raise the rates, which then drove inflation down. And we're not quite there yet. We're not quite at the inflation that the Bank of Canada wants to see, which is 2 to 3%. You can see, well, it's off the screen, but 2 to 3% is where this green line here, the shaded green area. So the prediction is that they'll hold the rates for the rest of the year, and that will continue to further drive the inflation down into the targeted rate. And that's really good news. That's exactly what we want to have happen. It's almost a perfect scenario. And basically what that means is there probably more than likely won't be a recession in Canada. And if there was, it would be mild. And Alberta likely would not experience that recession if it happens at all. In the States, sure, there may be a recession. I know there's a lot of talk of recessions here. You know my feelings on the media. All they like to do is scare the pants off of people. But there's probably not going to be a recession. If there is, it'll be mild. Alberta probably won't experience it, and I'll show you why in a second. So let's continue on here. And perspective needed on a housing correction. So what is a housing correction, right? Like, how much do prices have to drop to really be considered a bust, right? The answer is a lot. Probably at least 10% the prices would need to come down to be a bust. And a really bad drop would be like 20%. So that's not happening. The prices are going up right now, and a real estate market is kind of like a cruise ship. It doesn't turn on a dime. Usually it takes a long time to turn. So, you know, what would be the catalyst to changing the market? In other words, increasing the number of listings so high that there was more listings than there is demand. Supply versus demand means the prices would go down, and it would need to stay that way for a long time. Prices go up very quickly, as you've probably noticed the last couple of years, but they typically come down very slowly simply because they're sticky on the way down. People are reluctant to sell for less than what they want. So they really try hard to get that price that they want. If they're selling in a market that's trending down, they really fight to get that price. Whereas when the market's going up, people get exuberant. They get crazy. I sold a house last year for $125,000 over the list price. And the list price was good. It was like basically what it was worth. It wasn't undervalued. So things do get a little crazy when the market's going up. When it's going down, it goes down much more slowly over many years. So let's just take a look at this. So what is a correction? Let's put some perspective on that. Yes, in out east and out west, BC and Toronto and Montreal, since the prices peaked earlier in 2022, the prices have come down a lot, and there is a bust there. Absolutely, there's a huge correction that's happened, but it's because their prices have gone crazy, as you guys have probably noticed. And take a look at Montreal. In 2014, the average price was $280. In 2022, it was $528. So it's no surprise that there's been a big pullback in sales as the interest rates went up and a drop in the prices. But still, if you bought in 2019, you still made a lot of money compared to 2014, or even if 2020 or 2021, you've done really well. Same thing in Toronto. 2014, the average price $536. In 2022, basically 1.2 million. That's insane. So there's been a big pullback in Toronto. I don't know if you've seen that in the news lately, in the prices, but it's kind of like, well, big deal. You know, it's pulled back to 1.2 in the second half of 2022, and there's probably more price drop to come for Toronto and for Vancouver. But is it going to drop back to 2014 prices or even 2019 prices? Like, probably not. That would be a huge correction. And usually it doesn't correct that bad unless there's a really bad recession, which is just not going to happen. Edmonton and Calgary were kind of the outliers. And that's why there's so much demand for real estate here, because it's basically great quality of life in Calgary and Edmonton, more than Edmonton, obviously, especially the hockey team. But the prices haven't gone up that much. 2014, $349, the average price in Edmonton. 2022, $389. Not that exciting. Calgary, sleepy old Calgary, $438 in 2014, $516 in 2022. Now you got to understand that's across all product types, condos and houses. So it's blending all those average prices together. And so the average price looks a little bit low. Some areas in Calgary, some neighborhoods, the prices went up 20% just in the last year and a half to 2 years. So never mind from 2014 to 2022. Vancouver, 2014, the average price 691. 2022, also just barely 1.2. And I used to sell real estate in Vancouver, actually. I sold real estate there. I was licensed in BC from 2018 to 2021, and kind of saw firsthand how the market works there and kind of how the prices were either going up or down depending on the year. And really interesting to be a realtor in Vancouver. It's a very, very different market than Calgary. There's just no comparison at all. Very, very unique situation there, but also very expensive homes and very limited supply, and the prices are coming down. So Calgary, back to Calgary, sales to fall, but stay relatively strong. So we had a record-breaking year for sales last year, so it's no wonder that the sales are falling. But they're falling for two reasons. The sales are falling because there's almost nothing for sale. If there was more for sale, there would be more sales. It kind of makes sense, right? So if you hear that in the news, it's not a negative sign. It's unrealistic to think we can keep a record pace of sales that we had last year for over 12 months and keep that pace into this year. And again, like I said, the reason that the sales are dropping is because there's nothing for sale. So people are just like, I guess I won't buy because I can't find the house that I want. And that could continue this year. It's going to be challenging to find that right house. And when you do find it, you've got to be really prepared to make an offer right away and have all your financing done and everything already pre-approved and ready to go so that you can put in a solid offer. Alberta to lead the country in growth. Like I said, if there is a recession in Canada, it should be a mild one, more like a technical recession by the numbers, not a type of recession where a lot of people are losing a lot of jobs. The GDP might dip negatively for a little bit, but that's probably not going to happen, actually. Again, just check it out in the news in the business section and see for yourself. There's quite a few stories about that coming out in the last couple of weeks. Things are looking pretty good, actually, for Canada and specifically Alberta. Really strong GDP. And you can just expect that Alberta is going to do very well relative to the rest of the country, which is kind of normal for us. Alberta often leads the way in the strongest economy. Now, here's where all of this is coming from. We're starting to get into some really interesting statistics here. Calgary employment growth, strongest in the province. 2023 Calgary employment forecast. So basically, what this is saying, you guys, is in Calgary, lots of jobs, lots of really good, high-paying jobs. And if you actually look at it a little bit further, this was a really interesting slide that was presented during Anne-Marie's presentation, which is, like I said, where I got these slides. All credit to her. A lot of growth in technical jobs. So what are technical jobs, right? They're not really transient jobs. Like they're not retail jobs that are seasonal and kind of come and go. They're very, very sought after jobs that are high paying, that you need a strong education and background to get. And they're in the professional, scientific, and technical areas. So that's all good news, right? I mean, what do people do when they've got solid job prospects with high paying jobs that are, kind of good jobs that are not going anywhere? Like in other words, they're not transient or seasonal types of jobs. They buy houses. That's what they do. They get married, they have kids, and they buy houses. So that's all positive for Calgary real estate. So that's great news. Now, this also ties into the last slide and everything else I was saying about the inventory, the lack of inventory, and the number of houses for sale, and why we've had record sales last year, and we'll have a very strong year for sales this year, and we would have more if there was just more listings. So if you're thinking of listing your house, go ahead and do it, because you'll sell it probably without any problems at all. And anyway, this just shows you a lot of people, I feel like in the public that I talk to, don't know that this is going on, but it's been a record level of Q3 2022, record high migration into Alberta, and most of it into Calgary, for people coming from Ontario. 18,000, right? Like that's a lot. In Calgary, we only had 29,000 home sales last year and 38 or so thousand listings throughout the entire year. Well, 18,000 people moved from Ontario in Q3 of last year. Like No wonder we had a crazy market last year. There were so many people, you guys, that I talked to from BC and Ontario, and I just talked to someone, two, two people today I talked to that are moving from BC. And let me sidestep. I'll share an anecdote with you. I think this is foreshadowing of what the market's going to be like this year. Last night, which was February 2nd, 2023, I put a house on the market, a new listing of mine. I put it on the MLS. I like to do that on Thursday nights, and I do it at like 8, 9 o'clock after my kids have gone to bed. And I put it on at 9 o'clock. Guys, at 10 p.m., 1 hour later of being on the MLS for 1 hour, we got an offer. The buyer never saw the property. Their realtor said that they buyers from BC, they're moving here, they need a house, they can't come first, they don't want to rent, they just want to move right in. And renting is equally as brutal right now too. The rents have gone through the roof in Calgary over the last 24 months, and it's equally as competitive to get a rental. So if you can buy, you might as well buy. And yeah, 1 hour of being on the market, and they never saw it, and it went on the market at 9 o'clock at night, and we had the offer in my email inbox at 10. So guys, this is crazy. Now, today, the next day, February 3rd, 2023, we haven't had a chance to deal with it yet because we got it so late. I didn't call my client that late at night. And we have 2 offers on that property now, and one of them is for over list price, and the other buyer also hasn't seen the property yet. And then I got a call from a buyer who wants me to show them the house this weekend, who's also looking for a house for her parents who are coming from BC, and they're not going to see the house either. So there's a lot of migration going on. It's drastically affecting the real estate market, you guys. And keep something in mind too. If you're in Calgary and you're complaining or concerned, I should say, about these higher rates, first of all, remember, these rates, yeah, they're higher than they were a year ago, but they're not going to be going back down to 2% ever, probably. That was due to a massive emergency, which was the pandemic. And now they might drop a little bit over the next couple of years or whatever. But you guys, if you're a buyer in Calgary, whether you've got a house to sell and you buy, or you're just looking to buy for the first time, you're not just competing against Calgary buyers. You're competing against buyers from all over Canada and actually all over the world, because we're attracting a lot of international migration as well. And you have to understand something. If you're a person who's moving from Ontario to Calgary, for whatever reason, and you owned a house, even if it was just a 1-bedroom condo in Toronto, you could sell a 1-bedroom condo in Toronto for $650,000, right? And if you bought it many years ago, you might have paid it off, or you might have a very small mortgage because the prices have gone up so much in the last decade. And you could basically come to Calgary and pay cash for a house. So the interest rates don't really matter to these buyers that you Calgarians are competing against. So keep that in mind, that I wouldn't really be too concerned about the rates. You should probably just decide if you're going to take action or not and get into the market. And if you are, do it earlier in the year than later, because if you get in earlier, your home value should be going up, hopefully, over the next 12 months. So some things to consider. Now, could we see steeper price declines? We could if, and this is what this slide means. This is a hypothetical scenarios. Could we see steeper price declines? We could if economic activity is slower than expected. Like, I'm not saying this is for sure what is going to happen. I'm just using this information and my own ideas as a realtor that's out there in the market every day, seeing literally what is happening on the ground as it's happening, right? So are steeper price declines in the forecast for 2023? They could be if economic activity slower than expected, persistent inflation and higher lending rates. So if the rates went up instead of staying stable, if inflation didn't continue to trend down, it either stabilized at the higher rate that it's at now or even started to creep back up again, sure, then we could see maybe a stronger correction in the market than what I'm predicting or what this is seeming to predict. Where could we potentially see the prices go up? What might drive that? It's a hypothetical situation as well. The number and type of migration. So the number of migrants into Alberta, into Calgary specifically, and those type of people. Are they skilled? Are they employable, basically? And due to the nature of the Calgary economy, people that move here often are skilled and they often are very employable. And like I said before, what do skilled and employable people do? They make money, right? So they buy houses, and then that drives the price up because the supply is low and the demand is high. If the supply growth remains weak, so in other words, if the inventory remains low, that'll drive the prices up. And if the lending rates ease sooner than expected, that could happen. I think the mortgage brokers that I speak with, probably the best case scenario is that mortgages will be flat this year. They might go down a little bit. You've got to shop around for the best rate. Obviously, some lenders might provide different types of incentives or mortgage rate discounts, like if you have multiple products with them or other investments or all these different types of scenarios where they might offer a slightly lower rate. But overall, the interest rates will probably remain quite stable, and the prices will probably be going up. Buyers and sellers, conditions will vary based on price range, property type, and location. So if you're a buyer and you're in the market, what it's saying is the conditions for you that you experience will vary based on the price range you're shopping in, the type of home that you're looking in, and the neighborhood or the area that you're looking in. So if you're looking for a townhouse between 350 and 400 in mahogany this year, you are going to be competing against a lot of buyers, and almost all those listings will probably sell for the full price or maybe over the list price, assuming they were priced properly to begin with. I just sold a house in a townhouse in Auburn Bay a couple of weeks ago, priced at 350. There was 4 offers, and it sold for 365 in one day. Like I was also saying anecdotally, my listing that I put on the market last night, it's going to be sold by the end of the weekend. We've already got an offer for over the list price. We'll probably get several more over the next couple of days. This is what's happening. If you're a seller or a buyer for a more expensive home, then you might be facing a little bit of the headwinds that people are talking about, the higher rates and all these different things. And you might need to strongly look at if you have an accurate price on your home to get it sold. Or if you're a buyer, you might be able to be a little bit more aggressive in your offer, and you may not find yourself in a competing offer situation for certain homes over 700,000, 800,000, 900,000, $1 million, or whatever. Keeping in mind, if you are, again, it does say location, if you are in a highly desirable neighborhood that has a lot of $700,000, $800,000, $1 million homes like mahogany, if it's got a really, really good level of upgrades in the home, there actually is a pretty good chance that it'll still sell very quickly for very close, if not over the list price, because those homes are always in demand. There's never a lack of demand for really good homes in really good neighborhoods. So those homes are always competitive. So anyways, guys, that's it. I just want to wrap up and leave it there, and just let you know that, things are looking very positive for Calgary for 2023. If you're thinking about buying some real estate, please do reach out to me. I'd love to help you out. If you're thinking about selling, reach out to me. I'd love to help you out. And that's about it. So thanks a lot, guys. Have a great weekend. Take care. Bye-bye.